When investors talk about physical AI, many immediately think of humanoid robots, but the real investment picture is more specific. The clearest humanoid-related names right now are Tesla, Nvidia, and Ouster. Meanwhile, Symbotic, Teradyne, and Serve Robotics may benefit from robotics or physical AI trends, but they should not be treated as direct humanoid plays. The simplest way to frame it is this: Tesla is the humanoid body, Nvidia is the humanoid infrastructure, Ouster is the sensing and perception option. Tesla is the most direct humanoid stock in this group because it is actually developing Optimus. If humanoids move from prototype stage toward real deployment, Tesla is likely to attract the most investor attention. But it is also the stock where expectations may be running furthest ahead of reality. Nvidia is different. It is not building the humanoid itself, but it provides the computing, simulation, and development stack that humanoid systems need. That makes Nvidia a key infrastructure winner if humanoid development continues to scale. Ouster is a more indirect play. If humanoids are going to operate in real-world industrial environments, they need better sensing and perception. That is where companies like Ouster become relevant. Still, Ouster is broader than humanoids alone, so it should be viewed as a robotics and physical world perception option, not a pure humanoid stock. Now look at the names that are often grouped into the same story, but really should not be. Symbotic is mainly a warehouse automation company. Teradyne is more about collaborative robots and autonomous mobile robots. Serve Robotics is focused on delivery and service robots. These are real robotics businesses, but they are not direct humanoid plays. There is also an important point about industrial robotics. Some investors assume industrial robots have limited upside because they are already widely used. That is only partly true. Traditional robot arms are already strong in structured, repetitive work, and simple mobile robots are already proven in logistics. So humanoids do not automatically win in those areas. The real argument for industrial humanoids is different. It is not that they can do something no other robot can do. It is that they may be able to work in human-designed environments without requiring major changes to factories or workflows. That means tasks like carrying boxes, pulling items from shelves, opening doors, pressing buttons, and moving across multiple stations could become more realistic targets for humanoids over time. But even there, investors should stay cautious. In many cases, non-humanoid robots may still be cheaper and more efficient. So the bottom line is simple. If you want the most direct humanoid exposure, Tesla comes first. If you want the core infrastructure behind humanoid development, Nvidia is the strongest name. If you want a sensing and perception option, Ouster is worth watching. And for Symbotic, Teradyne, and Serve Robotics, investors should focus on their core businesses first, not on humanoid hype.